So her most recent research piece for her clients, my next guest referenced Weebles. Now, she used a picture of these Weebles, the latest version of them. They look like nesting dolls, the little Russian nesting dolls. This is a Weeble, folks, right? When I grew up, you punch this bad boy, it would go down and bam, pop right up really faster. Obviously, a lot of life lessons there, including investing lessons. Let's bring in NewEdge Wealth, their CIO, Cameron Dawson. So you don't remember those, right? You gave us a little one. It looked like a little thing. Like, those are big. They were like the life size. You punch them, bam, they go down, come up. But it's interesting that you would think this market, that's what this market recently made you think of these.
Yeah, it's this idea that Weebles wobble, which is what we had, but they don't fall down. This is a market that just did not fall down, that despite the fact that we were seeing bear markets in some of the largest weights in the index, with some Mag 7 names down 70%, you had weakness within the most popular trade with semiconductors down over 20%, and yet the market remained flat through all of that. And that just showed you that there was this underlying resilience that was happening.
When this was happening, particularly here, right? I mean, we've been doing this thing, but we're still holding, right?
Yeah.
I mean, what were you telling clients? Like, look, this was proof in of itself that, because on an individual basis, to your point, there were some blow-ups, major blow-ups.
Well, so there were two important things that were happening. The first one is that you were seeing breadth actually get better, meaning there were more names participating in the rally, even though the market was flat.
I'm going to bring up the advanced decline line.
This is the perfect example. The advanced decline line was making new highs, even though the overall market wasn't. So that told us that there was underlying health in other names outside of just the biggest weights. The most important message we were sending, though, is that any kind of correction, we saw it as short and shallow because it was more about positioning, not a growth scare. There were no signs that we were seeing a growth scare in this market, which just meant that weakness would certainly be bought if it were to be experienced.
So then let's talk about semiconductors. I've already had this conversation a couple times in the show, but this seems critical to a lot of things. I did reach a note. You like the fact that it did hold. It's, the 100-day moving average, it's right around, that's the big test, right? Getting above and closing above the 50-day. I think you said this will determine whether this is sort of a true unwind or just as sort of a blip, a temporary blip in the road.
And I know that 20% correction feels like a lot, but it's after you just had a 100% rally. And we always quote the great market sage Pitbull. We say the bigger they are, the harder they fall. That's what happens when you get so overbought within markets like this. So it's not surprising to see a 20% decline. We are encouraged by the fact that you saw support at that 100-day moving average. The important thing to watch is, can we retake new highs very quickly to have a continuation of the uptrend, or do we have to grow into some?
You believe, Cameron, and I believe, like, as we cross, like, let's say we close above the 50, that becomes a self-enforcing mechanism. Like, that creates a sort of sense of urgency. I feel like if we get above the 50, we're going to retest the all-time high.
It's going to create a positioning chase. And I think that is an important factor. Is at the end of last week, you were looking at tech positioning, maybe not just in semis, but tech overall positioning that was pretty late. And you look at overall institutional positioning, it's just in the 36th percentile. So that would tell us that there's just some chase that has to happen.
So the market's a forward-looking mechanism. I did read that you're a little concerned about earnings estimates. Are you for the first and second quarter of next year?
Yeah, look, we're growing earnings on the surface by 47.4% this quarter, which is absolutely wild. And we know about 20 percentage points of that is from these one-time gains from Anthropic and Google, as well as within Amazon. So as we roll into the next year in 2027, we have to appreciate that there's a big chunk of the earnings from 26 that will not repeat next year because of those gains, but consensus really hasn't adjusted for that yet.
So this could be something to be more concerned about and into the end of the year.
Yes, I think as we move closer to 2027, the question will be, do 2027 forecasts continue to go up? Right now, they've gone up by about 15% year to date. One of the reasons why this market has been so resilient. But if 27 starts to flatline or even go down potentially, that would be a source of more volatility. And what we would say would be deeper volatility, simply because it would be more of a growth scare. But we're not seeing evidence of that yet.
All right, so that's 2027. On Friday, we get the jobs report. What are you anticipating? Because the jobs report, recent inflation data, FOMC, calls about Fed credibility. There's going to be a lot of people are going to instantaneously extrapolate from this report on what the Fed should do. And I guess it means we're back to rooting for bad news. I don't know what should we be rooting for?
We should never root for bad news.
Okay,
we should
okay,
always be
okay.
rooting for good news. The number to watch in the jobs report is the wage data. The most fascinating dynamic over the course of the last couple of years is that we've seen wages remain very subdued, meaning you're not seeing great wage growth. It's actually trailed inflation for quite a few months, but you're still seeing the unemployment rate stay at 4.2%, and you have this shrinking labor force, which is allowing unemployment rate to stay contained. So at what point do strong corporate earnings or potentially higher inflation potentially push up on wages? And that would be the thing to potentially get the Fed to act if you saw more wage inflation, but you're just not seeing it.
Right, and then maybe if we don't see it, that will give Warsh more time to flesh out, I think, his grand plan of trying to change things and going into 2027. Are you looking for a hike this year?
We wouldn't rule it and wouldn't put it off the table. The market has a 66% chance of a hike in September, and so I think that it's a very, very live meeting.
Okay. Before I let you go, overweight technology financials, right?
Yeah.
For right now, I mean, this is just where most of the action is still here.
Yeah, I mean, Steve and Phil have already talked about loving financials, and tech is where the earnings are. So you got to be where the earnings are.
All right. I'm going to get you a real Weebles. You grew up playing with that little thing. I looked at, what the heck is, I got to get you a real one.
Nice.
It's about your height, those are a lot of fun.
I need one.
not today, but on those red days for sure. Cameron, thanks a lot. All right, folks, coming up, Vance Howard is with us to give you his latest picks. And Daniel Shea, what should you be looking for from the SpaceX earnings number? Everyone's asking me. When I walk out in the halls in the street, people want to know. They want to buy SpaceX. We'll talk about it next.